Good morning. Welcome to this week forecast. Last week, I told us that we should be expecting the first bearish candle in a week to close to further confirm that we are done with the correction to the upside. And so we can see the appearance of this shape of price action or candle on the weekly time frame for the first time to tell us that we are going bearish and that the dollar is losing its grip and is going to fall. Now we can see on the weekly also that after this structure, we've gotten a break of structure even on the weekly time frame. So we can see it here that there's a break of the structure here. We can see price at closed here. Now, even though the price action looks small, what is locked in here, it's not small for a small account. So it seems we are turning to the downside like we had hoped. And so the same thing we see on the US dollar index. And that's the instrument that so the same thing on the US dollar index, we can see the breakout structure, then going to the weekly, the daily time frame. So we can see that we had a break of structure here. That's a break of structure. That was a correction. This was a move, a 1, 2, a 3, a 4, and a 5. So within this 5, the last 5, we can see a 1, 2, 3, 4, and a 5. So the entire run to the downside is a motive wave, a 1 and a 2, a 3, a 4, and a 5. The last 5, a 1, a 2, a 3, a 4, and a 5. So if within this 5 also is a broccoli of 5 that you count to the downside. And within the last 5 of this 5, if you go inside of it, you sell another 5. So the correction here had gone in, and we know these had gone in like an ABC wave to the upside. It could have easily turned out to be a motive wave if they want to make it a motive wave. But now we've got this break of structure, and you will think the way this is correcting to the downside, or price is going to go back up and break to the upside. So the price action for us that are signified that we are coming down, this is the first thing that appeared, and this is the price action here, the evening star, to tell us that we are coming to the downside. What we are hoping for now is for us to correct this to the upside and finish the correction to the upside, and probably around this area on the daily time frame. Yeah, so probably around this area of we shouldn't break low here now. We shouldn't break low of this doji. Yeah, in our attempts to correct to the upside, we shouldn't break low. So we want to see the correction to the upside and for a further drop. So going inside the 4-hour time frame of this, we should see that we have done the first 5 waves to the downside, and we are trying to do a second wave to the upside. And before we have the wave 3, and that wave 3 is going to break to the downside massively. So that is what we are waiting for. And for anybody that was still not in the game and you want to catch your own draw, this is the moment you can look for to interpret what is happening. So we're going to pay attention to what is happening here. It's pretty much the same on the DXY. I'm just showing us the two concurrently. You can see it's the same, the break of structure here. This is the candle for us to say we are turning to the downside, and we are going to break here. But for now, the direction of movement is towards the upside. We're going to correct to finish towards the upside. So next week, we'll see dollar gaining some strength. That is what I can see. Dollar gaining some strength next week, and it shouldn't break beyond this area. So we expect that between here, between this point here and this point here, we should have price going to the downside again. On the 4-hour time frame, so we're looking at this now. We are looking at this on the 4-hour time frame now. So it seems we have done the movement is 5 waves, and it seems we are done with that 5 waves to the downside. This is wave 1. Here forms the wave 2, the low of the wave 2. So 1, 2, 3, 4, 5 of wave 1. Where if you go inside 1 hour, you will see this as a wave 4 and a wave 5. Then we now have an A, a B, and a C, which is an extended flat here to finish a wave 2. And here we got a wave 3, a wave 4, and a wave 5. So it's quite emotive, and we have finished this. And this move is the first move to correct the entire run here, and we shouldn't break here to the upside. We should not break that place. We had completed an A wave, and this is a B wave in the making, and they are making a mess of it. I don't want to say more than that for now. Now, with this said, if we turn to our instrument on the Eurodollar, I don't want to waste time. So because I'm going to break it down to you on the Eurodollar. One thing you must know is that Forex is not about, okay, 1, 2, 3, 4, 5 waves, ABC, 1, 2, 3, 4, 5 wave, ABC, and a straight jacket like that. It is more complex than you think, because at times when you are thinking that this is the structure you are looking at or the wave count, you might be incorrect. So there are a lot of things you have to consider, and you have to wait patiently for a structure to be completed for you to actually confirm that what you've been counting is correct or not. Remember, when we add this to the upside, we were like, okay, this should be the last wave of the extended flat in this area. After we had this move to the upside, and we have an A, and we felt like, okay, we've done a B, which is the entire here is a B, A, B, C of a B, which also gave us like maybe a zigzag or thereabout. And to A, to B, to C, which is an extended flat in the middle here for the correction, and that we are going further to the upside. Now, we are yet to break here. We are yet to break this high, and the price had made this. So when you don't know what you are dealing with, all you will think is that, okay, this is a downtrend, correct, a downtrend of a correction. But because you think that this price here has not broken the top of this, technically, and you must know that not until you break to the upside here, that is when you confirm that you are going further up to buy. But again, you begin to look at the recipe of what the correction had been. The move from here had told us this is an uptrend. So, and it's incomplete. And all this can be a correction. So when you look at the correction format, you see, okay, are we done with the correction or not? Then right from below here, you begin to think that, okay, this thing potentially is going to the upside and it's going to break here. So in as much as we had counted 1, 2, 3, 4, 5 to the upside here, this is a 4 and this is a 5. And this is a 1, a 2, a 3, a 4, a 5. And as much as it has ticked as such, we also should not lose sight of the potential of this one being a correction, this being a correction to this. But again, what has made it so strong for us that this move to the upside is not correcting this, is begin to look at the history on the larger time frame and what has been happening here. So then, with that said, we saw this as a potential, correction of this entire run to the upside. And, we were like, okay, when are we going to stop? When is it going to stop? When are we going to stop? When is it going to stop? And they kept on. It was supposed to be an ABC correction where they messed the C part for us. We had a decent A and a B, and this C part was messed up. So we said, okay, we shouldn't break the low of here. Eventually, we took the low. We thought, well, okay, I think it was here. Yes, it was here that we should not break the low of here. And so we broke this low. We were like, okay, are they going down again? Of course, technically, they could walk down to 78 of this. So after you break low of 78 of an extension or of a retracement, then you should know that once you break beyond 78, we are going to run the entire thing to the downside. So, but we got this price action, the doji and the doji, and we knew from that there was a confirmation on the lower time frame to know that, okay, now we are going to the upside. And so we are seeing this. And the movement before it gets here, back here, that's quite, it's a lot of pips, from that top to this base here, that's over 440 pips. So that's over 440 pips. And out of that, how much have we done so far? We barely did 200 from that top down to the speeds. Yeah, about 193. So you still have a lot of potentials to trade and to gain something. We are going to break this. And so potentially we are seeing this as the first wave of 3-1 and a first wave of 3-2. Okay. And in that also, we are doing a 1 and a 2, 1 and a 2 and a 3, and it's going to continue to grow also into a bigger broccoli. And it's a game of patience, and otherwise you don't know what you are doing. So in our attempt to learn patience here, one thing that we also want to learn is how to, probably take advantage of, opposing move to swell our account, because humans have to eat every day. You don't go in a week without food. So, and what we are trying to get at, what I'm trying to achieve, here is for you to counter trade also, to make something else and do it carefully. And that is what, I'll be much interested in. So now we are coming down, and coming down, we're going to look at, so we are seeing that we are turning up now. So this is the first appearance of this, and we can still take the low of here. We can still break the low of here. It's not impossible, and we may not, but if you're going to take it or not, we're going to see that on the lower time frame. So the weekly are giving us a low here of 1.07649, or let's say 1.0650. So 1.0650, it's the low here that the price has set for now on the weekly. Are we coming down to break below it or not? We're going to see. So on the daily time frame, remember what I told you? I said 1.07650. Okay. So on the daily time frame, we are seeing that the move, just like I did, this is a 1 and a 2, a 3. Okay, let's say a 1, A, B, C of a 2. So at the end of the day, so we can say a 1, a 2, the low of a 2 here, then a 3, a 4, and a 5. Then a correction of A, B, and a messed up C here. So maybe the C also was messed up and broken into three waves. So, but now we know that we are going to the upside. Now, this is the first move here. We had a low here at 1.069 6980, let's say that. So we don't expect price to come and take this low for now. So the price had done a 1, 2, 3, 4, 5 also an impulse to down to the upside, which for you is not clear yet. That's the way they move. When they were doing this, you'll be guessing. You'll be thinking of, oh, is this what they are doing? So if you go to the lower time frame, so this is the move now. We ended this move here, a 1, 2, 3, 4, 5, and we are going up. So like I did on DXY, I said, for now, we are not going to take this low, and we are moving a 1, ABC of a 2. So 1, 2, a 3, a 4, and a 5. So inside this 5, it is also a 5 waves. The last wave is also a 5 waves. And like I said, how do we know that we are going up? We've got to break structure. And this is the last structure here of the ending diagonal, which is a 3, a 4, a 5. We had broken, this with 4. So with 4, with 5, this to the above. So obviously we had broken the structure here to the upside. And before we can say that this is, we are going motive again, is that we have to see a 2, because the 1 and the 2 to a 3, actually, the wave had broken beyond 161.8 to this point. So which tells us that this is not a correction anymore. Even from here breaking up, we know that most likely we're going to get that. And like I said, we had finished the first broccoli, and it's going to give us an opportunity to do what? To trade. So going into the 1 hour time frame, going to the 1 hour time frame, so we can see it much better. You can see it much better. This is a 1. This is like probably a 4, a 5, which is truncated here, an A, B, and a C of a 2. So we can see a 2 here and a 3 here. Then we can see a 4 here, A, B, C of a 4, and this is the last 5. And now we have finished this broccoli. We are coming to do an ABC correction. So far, this came down with an impulse. And although it's a 3 wave, 1, 2, 3, and this is what is messed up now. So the B wave is messed up, and I don't believe that we are finished going to the upside of that B wave. What we want to see, probably, if we are able to maneuver around this WXY formation on the lower time frame, because it's a WXY that we are seeing on the B, and if it's going to go up a bit, maybe around 8450, 108450 or thereabout, we can sell equal leg to the downside. But either equal leg or not, again, we have to be looking at the fib retracement to the downside, the possible fib retracement to the downside at 61.8, but not more than 78. So if we go up now to look at that retracement, so a 61.8 is at a 0.7694. I gave you on the higher time frame that maybe we shouldn't break 0.76 I think 650. Yeah, that was what I gave. So, but 0.618 retracement is on 1.07694 here. And our 78 is here at 0.7369. So I entered a position here. So price is not coming here. This position where I entered now had become a 90. So I had a break-even trade here. So to put out a break-even, so one should be confident if indeed we had broken structure to the upside, that price is not by any means by manipulation is not going to come here. Price is not going to eat 1.07140. So we don't have any business here. But price may still come to 85 if they want to do that, which is at 1.073, 1.07237, but not here, 140. So, but I would think price may just pull back from here, within this zone, and it may not get to 0.7 78.6 retracement to the downside. So, but we need to see this break low of here. So once we break the low of A, then we can take our retracement tools to see if we're going to walk past this a bit to the downside around this zone here. Between here and here, we should get a price action to buy. So you should be looking between 0.76 and 0.73. That's 30 pips range to buy. You must not miss that. So having said that, I'm not going to go inside here and begin to explain here. So we're going to go to gold straight, and I'm going to finish there. Back to the weekly, then we move to gold. What we have said is that we expect dollar to gain some strength. And you know how I came about this low? You see, at 7.6, 7.6, maybe 650. So price is not probably going to get here, because what we saw now was around 769 something. So price will not break this low before they take it up again. So that is what we can say here. Maybe, or it may just send a wick around this area. So that is what we had seen on the lower time frame. So going to gold. Gold has been a bit of a mess. But again, for me, I think gold, it's its own wave. It's delayed, maybe a wave or two delayed to DXY and Eurodollar. And I will show you why. Right from this move, we are taught that we are done a 1 and a big 2, and we are inside a 3, the third wave, and we are doing an ABC here. So we are taught of that on the weekly. So this is the third wave, and we are seeing a 3-2, and probably we are not going to take this low. We look at all that, and for now, it has been a ding-dong affair here. I remember when I explained this in the video, a possible A, B, a C, or a WXY. I can't go back to that video now. So let's go to the daily so that we can see that. Yeah, so this is it here. This is it here. So this is a 2. This is with 2 here. Let me push. Okay, so we had a wave one, a one, a two. You can see gold. You are looking for gold when it's impulsive, but not give you that kind of a count that you expect. Okay. The two, it's very shallow here. The three, the four, and the five. So it can be like that. So gold can make a mockery of your count. But the most important thing is you see a five waves structure: 1, 2, 3, 4, 5. And we had an ABC of a two, which is like here is an a 1, 2, 3 of A, or let's say A, B, C of A, the A wave. Then the B wave, we had A, B, C of that, which ended here. Then the last wave to the downside is a five-wave structure: 1, 2, a 3, a 4, and a 5 here. I'm on the daily. So this ends an A, B, and a C of a 2 of this 1. Now we had another move to break above here because we are broken above structure. When you break above structure, tells you are still bullish. If you're not bullish and we're going bearish, we won't be taking up the structure. So this equal this, then this came down. We broke above this structure. We know we are still coming to break above this area, but it has wasted time, right? And you are impatient. So now looking at here, after this move that broke above structure, this is seen as a 1, 2, 3, 4, 5 also, and has finished this broccoli, and we are correcting this a mess of a WXY, where we have 1, 2, 3 of a W, and this is an X, like I said, and we are seeing this Y potentially has also been complicated in itself, just like what we are seeing on a smaller time frame on Euro USD now. So a W, and X. Then the Y also was divided into A, W, X, Y. So A, W, X, Y of the Y. And we said this barely touched an 100 extension of within this itself, within a W, X, and a Y. Retracement is just a little shy of 100, and now we are going up. So this was going up gradually, and we thought we are correcting this, that, okay, we may still turn down, do this, correct this, and go down. But now we are broken structure to the upside. That is what we are going to look at, how we've broken that structure to the upside. Because gradually it went up. So just like it was very delayed on Euro USD, now in this case, it has not, I think it's just completed its own broccoli to the upside. That is what I think is looking like to me now. So we can see these as a 1 and a 2 and a 3 and a 4. So this actually is the fourth wave. This is the fourth wave, and this is the wave 5. So because it's the wave 5 now, we should be correcting this entire run in ABC format to the downside. So I believe that gold is trying to do an ABC correction. I won't say this is an ABC correction of gold because it didn't even break the primary 4 here. So it didn't break primary 4 here, still tips this as a 4. And this is the last 5. So if we are wrong, then we're going to break above here. So if you're not wrong, if you're selling, I think you should just cap your stop loss around that area, around the area of 2041, maybe 500. So that's where you should just cap your stop loss, because a breakout of that means that probably we are still going up. But I believe that we are done with a broccoli, a 1, 2, a 3, a 4, and a 5. So on euro dollar, we are done an ABC of the first. Sorry, we are done an ABC, or let's say A move to the downside, and we are within B. So I believe that gold is like 2 waves delayed when you compare with DXY and Eurodollar. So I believe this is the first wave of A, and we're going to have a B and a C before we turn to the upside. So we are expecting that we are going to break low of this area. That is what we should be expecting. We are going to break low of this area, and I don't think we are coming to break low of here anymore. So price most likely will not break low of 1995. And that is what I can see from here on gold. So we are broken this structure here. So we are broken this structure here, though we are yet to break this structure. Like we said, that this is a potentially A, W, X, Y. But if you look at this X here, we are taking more than 90 retracement. That tells you we are broken structure already. So eventually it's going to run and break it. So I'm not seeing this move as a correction of this X or Y wave. This is X, W, X, Y. So I'm not seeing that. I'm seeing that we are going up now. This is a completion of a broccoli now for me. For us to look at that, we have finished this broccoli. I'm going to do something to teach us. Let's see. How do I do that? I want to teach us something. Okay. I'm going to focus here. I'm going to focus there. I'm going to focus there. Or better still, let me go somewhere else. Let me go somewhere else because of my drawing there. So it won't be too much messed up for you. So let me shade that let me give you these shades. No, it's not working. Let me give it yellow. No. Good, yellow. So let me give it yellow. This. Let me give it this. Good. So that we can see once I break it down. That area, let's go on a 1 hour time frame. So on the 1 hour time frame, I want you to see that these are ticked like 5 waves to the structure to the upside and a break of structure. We have to see that on how to take advantage. Okay. So like we said, we are not seeing ourselves breaking this low for now. This low for now, it's a no-go area on gold. We shouldn't take this low for now. So we are not coming to take this low for now from what I can see, and because that's a primary too, if indeed we are bullish again. So we can see that. Let's go on a 15 minutes time frame to look at this structure here. Good. So on a 15 minutes time frame, I think this is too colored. What do I use? What do I use? What do I use? I want to use something that is light. Okay, let's just continue. So on the 15 minutes time frame, just like we saw on the higher time frame that I said, it can be a shallow two. So we can see that this is a 1, this is a 2, and this is a 3, this is a 4, and this is a 5. So with that, it means that we are done correcting or making the last wave 5 to the upside of the entire run. That's the 5 waves to the upside of the entire run. This is 15 minutes time frame. This is a 1, A, B, C of a 2. Then we add a 3 here, a 4 of a 3, 5 of a 3. We now had an A, B, C. That was what we had the last time, A, B, C of 4, which didn't take the low of this 4. When you are correcting a 4, it should not take the low of the primary 4 here. So we didn't take the low. It may break the low of 4 of 3 or about equal, but it won't break this point here. So now this is where we are now. And when we are correcting a 2, we should not go beyond a primary 2 also here. This now is the end of the move. Then this is the primary 2, which I don't think we can case it. It depends on how we're able to come down. It's not easy to teach and not waste time. Some of us want quick updates. I want to give that maybe a quick update, but when you have to teach like this and for you to know how to make gains, important thing is just to make profits. So now going back there now. So we know this is 1, 2, 3, 4, 5. So we're going to break low here. And what we are saying eventually, because gold may not do a 61.8. So potentially we are saying that gold it's possible that gold would come to 78. So you can see that that 78 is not breaking that area, the primary 2. Gold may do 78. May do 78. It may do a 61.8. 61.8 will be a strong area to consider gold. And a 50 also will be a good place also to consider gold. So those are the areas you expect gold to knock coming down. It's highly impulsive. So, and this will be the last place or may not be the last place. And this will be the last place, which is 85 here, 1992. You know, after we've done that, we know that this is the last place gold is not expected to break, though this is primary 2. So if it walks past slightly below primary 2, it's still allowed. That's so I need to show you that. I need to show you that, but the wave that is coming to the downside is what we decide if it's going to fall anywhere. It's going to fall here. So for now, this is we're trying to just predict the areas it could retest, but what is coming down will show where it's going to retest. So let me go inside of a 5 minutes time frame on gold. Inside of a 5 minutes time frame on gold now. Maybe I should just knock this off. Yeah, let me just knock that off. So on 5 minutes time frame of gold, so we can see we are broken this structure of 4 here. A 3, 4, and a 5. We are broken it. So that there is a break of structure confirmed here. So we need to see how much of retracement we are going to have. So these also had gone down like a 5 ways broccoli on the lower time frame. So where you need to take before you know that you are correcting and you want to catch opportunity to sell, we need to break above this 4 here. We need to break above that 4 there. So once you break above that 4 there, you are looking for your buy, because this potentially may still go down. And because if it's a correction, you know, a correction can just begin to fall like a pack of whatever, and you may not be able to catch a decent entry. We don't know if they're going to give you an opportunity to. So if gold gives you opportunity to go up, and yeah, you may just find an entry. Gold has done how many pips now? Gold has just done like a 6-point move, which is like a 60 pips to the downside now. 60 pips, a 6-point move to the downside. That's what it has done. And it still has a lot of potential to go down. It's either you want to come in and put in a small lot size, you know, at the opening of the market, because you might not really have a decent pullback. But in case we are expecting a pullback, we should be expecting a pullback not to go beyond the primary 2 here. Let me change the color here and see on the 4-hour time frame where potentially we're just trying to see, do we have a resistance on the 4-hour time frame? No. Oh, it's not giving me anything on the 4-hour time frame. It's not. Okay. Maybe this area will be a primary 2 here. Price should not take that. Price should not take that at all. 2040 really, if we are having a bigger correction now, price should not take that. We can't say anything on the daily. Let's see, do we have anything on the 1-hour time frame? Yeah, on the 1-hour time frame, okay, I think it's more clearer. It's more clearer, that area. And maybe price would retest this area. Within this zone, we might have a retest for a further buy. But for now, we're not sure. This thing would have to push up, break to the above before you can say if it's going to give you a smaller time frame correction anyway, because it may just continue to drop, just like you had here. It went up. It didn't give you opportunity of even making entry here. It just went up, gave you a small correction, came up here, did a 4 and a 5, and this, well, coming to the downside. So it's that you join it with a small lot size, and if it did break above here, then you can look for your entry again. You cannot predict, you can't tell the price go up back there. You know, so you can see that area actually forms on the primary 2 here. That's a primary 2 there. Given a primary 2 here. So that's a primary 2 there. And we need to break above here, really. This is potentially a 4 here. This area will need to break above that. Eventually, that might be a good area to look for to begin to look for your retracement to buy. That's about 20 to 37. But we need this to come up and take the price to the upside. So all you can do is to see how your price begin to walk in between this line. If price is going to take that again, here we need to see that the price will take up this first, take up this second, and when that is beginning to happen, then you can say that you are going up to take this. Once you take this, you look for your retest, maybe 61.8 or 50. I think 50 will be ideal for you. Just look for 50 retracement, and at that point you can begin to sell if price gives you that opportunity. And if it goes and break lower before it turns up, then you take the low again, look for a retracement of 61.8 or 50. That's what you need to do, because it can still go low and break this low. So you must know that. And so if that happens, potentially, let me go to 1 hour time frame, because I'm going to end now. I'm taking too much time. So 1 hour time frame, if you are able to catch, even if you catch it from here, so potentially we still have this place, you know, as a 50, because gold has a knack for 50. So as a 50, that is about how many points? About 228 points, 280 points. So that's about 280 pips. Yeah, or 281 pips. And if you come here to 61.8, that's about 350 pips. This would be a tall order coming down here, but it will fall 440. So, but minimum about 28, and it won't be a bad sale anyway. So, but all we are looking for is, once we did an A, we look for a B and a C wave. Get out, take your buy order. See you during the week. Bye for now.